Good afternoon, everyone, and welcome to another edition of Beyond the Bell. It is Monday, March 25th, 2024. It is, well, let's see, our clocks say it's 60 seconds after the bell, which means it's time to go beyond the charts, beyond the news, beyond the bell. And I see the usual suspects today, and I say that with all affection. Our good friends, Drawdown, Mike James, Yenny, Leo, you guys truly set your clocks towards this show, and I really, truly appreciate that. Tiana, nice to see you. Love to see those bells in the chat. Oh, my goodness. This is I know I set my clock by this show because I just so enjoy being here with you guys. And speaking of clocks, let's go. It is time for the big picture on a Monday, guys. So we've got a lot to talk about today. Boy, I will tell, this is an interesting chart we have going on today. So, guys, honestly, we're going to look at the 4 hour. We're going to zero in on the 5 minute. Sure, not the most exciting day out there. There was a few opportunities today. Nothing that is just insanely juicy per se. But we'll get into the reasoning behind this. We'll talk about the lesson of the day momentarily. But specifically, guys, we talked about this on Thursday's show. Okay, we have a multi-wick rejection of the 640 to 650 level up here in the NQ. Double top confirmed and formed. Now, we talked about as we move down, the first area of support we were going to look for, because, again, what is one of the primary theories, right, within technical analysis is that previous resistance becomes support, previous support becomes resistance, yada, yada, yada. It's something you can seemingly set your clocks by. And we have this little area that had acted as resistance after this big push down. Okay. And now we push back up through this area, form a double top. And now we've come in and we've retested this first area of support, and we've held. Nice little buying tail right here. And then a nice strong candle pushing out of this. Now we're kind of retesting. So is this a break, retest, and go? Or is this just a break and fail? All right, so the good news is we're going to know on this one probably overnight or by tomorrow. I don't think we're going to stay in this particular area. I think we're going to make a run, again, either down here or back up to this area. I'm not ready to call us above here. Honestly, I'm not too ready to call us below this level here. I'd like to see an expansion of the zone, right? So this zone basically goes from about 650 to about 480. That's not a huge zone when we're talking about a 4 hour chart. Yeah, 5 minute chart, making that kind of move within 5, 10, 15 minutes, half hour, big move. But on a 4 hour chart, not the biggest area. So if we're sort of sentenced temporarily to just pogo through this area, it's going to be tough finding opportunities on sort of an hour by hour basis, right? Typically you can, again, especially in the morning, right? That first hour, you can set your clocks by the amount of moves that we see in that first hour, and it kind of feels right now like we're about to It feels like we're in a little bit of an area of consolidation right now. None of this caught us off guard. For those of you that follow some of the options areas, like Spot Gamma. The whether it's newsletters or just analysis that talks about some of these areas, they were calling a very low range today. In fact, their range they were calling for was basically give or take 50 basis points in the SPX. Now it's a little different from the ES, et cetera, but a very narrow range day. And in all honesty, it really was. So if we move to the 5 minute, not the Renko chart, let's go by the 5 minute. We really only had one real area of movement, right? So coming off this low here, the move here was really about it. The only momentum move that we saw today, right? Maybe a little bit down through here as we moved down towards and retested VWAP as the day progressed. But honestly, this was about for momentum traders. Right now, I know there's people that maybe are a little more of the scalp orientation, right? And there was some opportunities between +1 standard deviation, some opportunities down here at VWAP. yeah, just sort of not in terms of really going for a momentum day, just not a lot of that today. So we're kind of caught, guys. Make sure you fill out the question. Let me know if you were red or green today. We're kind of caught, guys, in between FOMC and kind of what I think is going to be a pretty eventful summer session, right? I have long said, you guys have heard, even before we had this show, when I was contributing, in the fall, doing webinars, etc. I said, I just think it's going to be 2024 is going to be an outstanding year for day traders in terms of there's going to be a lot of intraday movement, right? Thus far, that has proven correct. Now, sure, we've had days like today. We've had days that are even more narrow range today, and that's okay, right? We're going to have, you need the price action contraction to eventually lead to the price action expansion. But we got through FOMC. Wasn't a whole lot of surprises in FOMC, in the speeches, in what was done. The Fed sort of reiterated the guidance on rate cuts that they had for several months now. Okay, so not much of an opportunity in that news, in unexpected news, right? So as we move into summer and we continue to focus on things like inflation, PPI, CPI, interest rates, commentary from the Fed. Obviously, we're going to a very impactful national election season in this country. I'm sure, not that we're not already inundated with headlines about both main candidates, but as we move into the summer and, candidates get on the campaign trail, not just in the presidential race, but all over as well, and to start talking about economic policies, the economy moves very fast nowadays. Who knows what the economy is going to look like 2, 3, 4, 5 months from now? These are all going to be things that are going to, I think, lead to one of the more exciting times on a day-to-day basis in the market that I've seen since I've been trading, especially since I've been day trading. And we are starting to see that pick up, but we just have to kind of get through days like today, right? And it goes towards, I'm going to make this our lesson of the day, guys, because I think this goes towards exactly what we've talked about. And then we're going to open it up, guys, to questions. First of all, I want to, TGGX, I'm starting to see some profitability after watching Beyond the Bell every day, sir. First of all, congratulations on starting to see some consistent profitability. We'll make this drink to you. This is just water. I don't switch to anything else until much later in the evening, and it's a weeknight, so I probably won't drink much. But this is to you, sir. And really appreciate the continued views, right? And keep going, right? And it's awesome and humbling that this show had played a small role in your profitability. So low volatility this week because of the holiday. That's a distinct possibility. Obviously, Good Friday is this Friday. It's sort of the one non-federal holiday, faith-based holiday that the markets take off. And then of course Monday, sometimes the Monday after Easter, and obviously depending on Passover and things like that, can be a little low volume as well. But I think we're probably getting into a week or 2 week period of a little more of consolidation, a little tight range, barring some unexpected news. But that's okay, because I think as we get into April, May, June, we start getting some of these rate cuts that the Fed has been alluding to. We get into the thick of the election season, and I think we're just going to see a lot of volatility, a lot of massive moves in the markets on a day in and day out basis, right? And this is where it's amazing to be traders, right? Or traders rather than investors, right? Because let's say tomorrow we get some major piece of news, doesn't matter if it's positive or negative, that just sends the market into a multi-week frenzy, right? We head up here, we head way down here, we do all this, we go back and forth, we do around the block, take your second left, do all this, and let's say 6 months from now we end up right back here at 560, right? We don't care about that. Actually, I should illustrate that a little better by putting this on the screen, right? So even if we just go crazy and do everything that we're going to do, if we end up right back in here in October, the investors are all going to be pissed, right? Because they'll have 6, 7, 8 months without a consistent movement. Whereas us, as long as we get that intraday movement day to day, week to week, honestly, we don't care we do not care if the markets end or close at 4 o'clock Eastern at the exact same place that they open. We don't care that the day is a doji as long as it has range, right? It can open and close at the same thing as long as it gives us, speaking about the NQ, maybe 70 to 80 points in any given direction, and it gives us some opportunities to enter those areas and make trades. We don't care where the market ends up. Okay, it's one of the hardest concepts for people coming into the market, and this is something I'll explain to friends who aren't in the market, but they know what I do, and they'll say, "Oh, yeah, market went down today. That had to be rough on you." No, I made about 1,500. Yeah, I caught that move down. Oh. You don't always understand that, right? Or, boy, the market's not moving much this month. Well, actually, yeah, you're correct. The market opened and closed on the month almost exactly the same. But boy, it gave us a couple of a couple percent moves up or down and had some opportunity. That's what we want as traders, right? But keep in mind, there's a lot of things, guys, I try to make very topical on this show based on what's going on the day-to-day markets. And then there's things you're going to hear me and already have heard me say probably a couple dozen times. And I'm going to continue to say them because these are the things I need to hear stuff 10 times because I'm a stubborn SOB sometimes, and I have plenty of references on that, okay, both current and former. But once you get some of these lessons through your head, they can really make a difference. And one of those is getting over that mentality, the market is, I am a trader. The market is open. Therefore, I trade. No, you're a trader. You trade when the market gives you an opportunity based on your playbooks, your risk reward, right? Those are the types of things that you need, when that clock strikes midnight, you need to be ready to go at 8:30 the next day, or 9:30 for those of you on the East Coast. That's a little late for me, right? I've had a lot of friends that have traded in California, and they're like, man, I hate getting up so early and being ready at 6:30, but gosh, it's nice for everything to be done at 1 o'clock, right? I got the whole rest of my day. I'm up that early anyways. It doesn't really matter to me. Okay, I want to get into the questions, guys, so let's go ahead and move to our mailbag, and we're just going to stick with you guys in the chat. All right, so so we already talked about low volatility this week due to the holiday. Basically that's it. I don't know if that's playing a direct role. It could just be, again, we came out of FOMC without a whole lot of surprises, right? So the markets are just, again, this is one of those situations, if you're long and you're not sitting on a big profit that you want to start taking off, there's not a lot of reason to get out. Same thing with shorts. Right? Now, this is going to be one of those things. Again, the whole concept, guys, of price action contraction leading to price action expansion. I'm going to zoom out quite a bit here and give you guys, again, look anywhere on this chart, guys, and we've done this exercise here before. Price action contraction, price action expansion, contraction, expansion, contraction, expansion, etc., etc., etc. Right? So we need these areas of, this is the one guarantee in the markets, guys. You know how there's no guarantees in the market? No, there absolutely is. In this scenario, price action expansion always leads to price action contraction. Price action contraction always leads to price action expansion. What we're trying to do as traders is, whether through indicators, patterns, whatever the case may be, we're trying to predict when that price action expansion is going to happen and be, of course, on the right side of that. So we're just in a price action contraction, although we are, I would say, bleeding down just a little bit. And this is kind of what the for those of you that have not traded or were not traders prior to the pandemic, right? It was not uncommon, and we'll leave it on the 4 hour. I think that makes the most sense, for something like this, right? Strong push up, and then the bulls just lose momentum. Not that sellers necessarily step in, but the bulls lose a little momentum, and we just kind of drift down. We call it kind of a low volume bleed out, right? Now, really, since 2020, the markets most of the time like bleed upwards, right? Where you see you see movement, slow, not even steady, but slow movement, lower volume, and all of a sudden, the markets just shifted in 2020 to be, the bleed up happens a lot more than the bleed out or the bleed down. Okay. So, but right now we are seeing a little bit of a bleed down. I think we found a little bit of support here. The good news is I really think this 18,500 is at the top of this range. I think this is going to be a really nice pivot point for us. If we breach that again and we break down below this box, I do think we're going to go test 18,300, right? So if we head down here, this is where I think we're going to consolidate. Okay. Or potentially we can, we retest this zone, We move back up and retest here. Again, I just don't see that maybe we have enough conviction to get up to new all-time highs. But again, we do have a double top, which means, in theory, making another run at this, because triple tops in the indexes are very rare, especially on a time frame like the 4 hour, that the next run we make and we get towards this 18,700 level, we'll probably break it and make new all-time highs. Okay, let me catch up on the chat. Let the trade come to you, James. That is 100% accurate. That is something that cannot be said enough. Jesse Livermore had that quote, the big money is not made in being early in a rally or early to a sell-off. It's in sitting and waiting, right? So many of you guys, because I've talked to a lot of you, I work with some of you are in my community, some of you I talk to in the Blue Sky Discord. You'll sit there and and this is something I've done as well, right? This is the C word, consistency. Maybe you'll have a trade that makes you, I'm just going to throw out numbers based on like a 50K eval. You make $800 in a trade, okay? And then you rush into a couple more, you lose 250 and 300. Or we'll say 250 and 350. All right, so you're sitting there, what was an $800 day is now just a plus $200 day. Now there's pressure on you for the next trade, right? And you're going to lose sometimes, but let's say that $350 trade was one you shouldn't have taken. You took it because, again, the markets are open, you're a trader, therefore you have to trade. Maybe you saw a setup that wasn't quite what you, according to one of your playbooks, but you took it anyway. Okay, these are the mistakes that can just really sort of bleed out accounts, and especially when you're dealing with something like a trailing drawdown, those are the types of mistakes that can jump up and bite you. Okay, so on a day like today, guys, I had really 3 opportunities for a trade today that I took all 3 without hesitation. One was a really nice winner, one was a small loser, and one was a break-even trade. Right, so it was not an active day for me. And yeah, and honestly, I had a trade that was probably not, it was good, but it wasn't great. And at the end of the day, I'm not sitting here, $2,000, $3,000, $4,000 richer, but I'm sitting here with a few $100 in my pocket, and I didn't force anything today. And that's the most important thing. And James sums it up very well with in sort of another meaning there. You got to let the trades come to you, right? That's the old, Mark Douglas used to talk about this particular topic, in that we have no control over the markets, right? The markets are going to do what they're going to do. Everybody in this stream right now could all get 10 times our net worth tomorrow and put it all into one index. It's still going to be a drop in the bucket. It's still not going to be something that's going to move the markets, right? So we have zero control over the markets. But the flip side of that is the markets don't have any control over us. The markets don't force us to trade, okay? The only thing that makes us trade is when we push the button. So when we get into these situations where we're trading for the sake of trading, we're not letting trades come to you, even if they're not big losers, they can sit there and chip it away at those nice winners, right? I've worked with clients over the years that have had 60% winning percentages and lose money hand over fist because they sit there taking, tiny little, or relatively speaking, tiny little losses that just chew them up. Or they take that one big loss that eats up 3 of their winners. Okay, the old saying, there's a million ways to make money in the markets. They're all just hard to find. Well, there's 10 million ways to lose money in the markets, and they all come very naturally to us. All right? So, again, just kind of keep that in mind. Frank, did I miss the sign up for the giveaway? No giveaway today, Frank. We do occasionally do giveaways without an announcement. I've done that about 3 or 4 times. Maybe we do that again tomorrow. Maybe we don't do it till next week. Maybe we don't do it till July. That's part, again, I think we give you great value on this show every day with some of the knowledge, and we've already had people mention how much they enjoy making this stream a part of their day, whether now or they set their clocks to 8 o'clock tonight and they watch it, when they're laying down, whatever the case may be, get the kids to bed. I'm going to watch Beyond the Bell. We appreciate that. Our view counts, I think, usually double overnight on these, which means there's a lot of people that watch them. And even if we don't have the giveaways, you guys can get some great knowledge here. But stay tuned because we do a lot of those. Okay, let's catch up here. Any free resets? No. In your experience, do you think VX options help with futures pricing? Okay, so I'm assuming you mean like VIX, the VIX options. So I used to trade. I've never been a huge trader of index options like the SPY, the QQQ, any of those. I do obviously heavily favor index trading in futures. I will just say this in terms of any general, when it comes to options, I could spend a lot of time perusing the stream. Or perusing like an options table or a stream of options or any kind of that. I prefer to let others do the work for me. There's a number of really good, whether they're analysts or like newsletters out there. I personally subscribe to one that I call Spot Gamma, and I have no business relationship with them. To my knowledge, they have no business relationship with Blue Sky. I'm not an affiliate for them, so I'm not like hawking them to make. But and I think they've raised prices. I'm grandfathered in because I've been with them for several years. But they are the ones who look at the options flow, from multi-month options flow to the zero DTE stuff, and give analysis based on that. And they're right a lot more than they're wrong. Now, of course, they're not right every time. Nobody is. But like today, I told you coming into today, they said we expect a very, very narrow range in the SPX, which is sort of the general bellwether for all the indexes. And they were right. It was a very narrow range, kind of not a lot of opportunities today. And again, sometimes that can get me, they'll say a narrow range and it ends up being wrong, but more often they're right than wrong. Again, it's just spotgamma.com. I don't know what their rates are. I think it's like $50 to $60 a month for some of their newsletters. And they're one of those that has tiers of, get this, the more you pay, the more you get with this kind of stuff. I just want their founders notes, their newsletters. It's very helpful. $50 a month, if it even keeps me out of one bad trade per month, that would have lost me even $100. It pays for itself, right? As good education does. Yes, Mike, I'm giving away knowledge every single stream. No costs except whatever you pay your internet service provider. Frank, I have no knowledge of what was posted there. But yeah, I'm still happy you stopped by, and I hope you learned something today. Oh yeah, Mike, what do we got? I actually haven't looked at the. I usually Sunday night. I was out late. That doesn't last night not like out partying or anything, but I was out dealing with a few things, and so I didn't get home till late, so I didn't have time to kind of do some of my traditional prep. I usually only look at like the next day in terms of, people think that's weird, right? Like, how do you not know what's going on Thursday? Well, it's Monday. I'm a day trader. Like I barely know I don't know what I'm gonna have for dinner tonight yet. So until then, you're expecting me to know what's going on tomorrow. I try to keep things very local, very compartmentalized. It's worked very well for me over the years. So yeah, do we have like CPI or PPI prints coming later? The markets have really been reacting to that, although a little less every time, right? The market seems to, at least the market participants, I should say, seem to be getting a little more of a handle on the inflation numbers and not overreacting to a lot of that kind of stuff. So yeah, definitely something that we're going to be looking at, but I'm not sure it's going to have as big an issue as it is because inflation's kind of it's priced in, I think, at this point. In the market, guys, post COVID crash, the market shrug off everything. We've had several times where it's like, oh, this is clearly gonna get the markets anxious. No, it doesn't. The VIX is historically low. I'm not sure the last time the VIX was this consistently low over this many years, really, but especially over the past few months. We're in a high inflation environment, high interest rates. We have a very contentious presidential election about to happen, and the VIX is like, meh, all right. I figure at this point we could hear like Russia's dropping nukes on us, and they'd be like, well, is that priced in? There'd be some idiot on CNBC that would talk about that, right? Speaking of, this is why. So I still remember this. I've got a very quick story for you guys. I was in New York at a conference right before it was one of the money shows, the Traders Expos right before they locked down New York for COVID. And I remember on Friday, so we got there on Friday, we left Monday night. And I remember on Friday, it was just kind of starting to, okay, this COVID thing may be a thing, right? And starting to talk about lockdown, starting to talk about all that. Okay, fine. So I remember when I got there to the I checked in my hotel room early. It was a couple hours before the market closed, and the Wi-Fi was horrible in this hotel. New York hotels, I guess, are famous for this, right? So I'm trying to get some stuff on my phone. Reception is okay, but not great. So I did something I hadn't done for years, which is turn on CNBC, right, for their little closing bell segment. And these guys were just kind of going off, all right, this could affect the markets, but it's probably not going to be a huge thing. We may see a few percent correction. Well, that Sunday night, okay, is when the markets opened like almost limit down, and then they hit limit down that Monday. So I went up. I remember I go back up to my room to change after one of my talks, and I ate a little lunch, and I turned CNBC back on, right? And these same group of people that were just talking, it's not going to be a bit. We're saying, could we go down 50%, right? Like they were predicting like one of the crashes of all crashes, right? Like, again, 72 hours, these same people, not a big deal to, can we go down to 50%? And that's very reactionary. As traders, we don't want to react, okay? We want to be proactive by playing our patterns and our indicators and all that. So tune out the noise, guys, because there's so much of it out there. All right, guys. So I will give you guys just about 30 more seconds to post any questions. I'll take one more question, and then we're going to call it a day. I appreciate all you guys showing up here and giving us... Again, we didn't, the markets didn't give us a ton to talk about today, so it's always nice when you guys ask we get great questions. Actually, I get very intelligent questions from you guys, and I'm not just buttering up you guys as my audience, but no, seriously, I've worked a lot of big events, guys, over the years, both live and virtual. The questions I get, oh my goodness, there's times I just want to be there. I've literally gotten, I mean, don't get me wrong, I get great questions at those events too, but every now and then I'll get a question where I literally want to step off the stage, virtual or live. I want to go up to this person, I want to pat him on the head and go, trading is not for you, right? That was a point of contention with a good friend of mine and former boss in this business, that anybody can learn how to trade. Now, I do believe a lot of people can, and a lot of people that would be successful in trading give up before they get successful because they've lost enough money, or they've gotten too frustrated, or they've blown out evals, whatever the case may be, right? But there are still some people who just don't possess normally the mental equipment to handle the year to 2 years that it takes you to get really good in this business. Doesn't mean you can't start making money fairly soon, right? But it's a 2 to 2.5 year journey where you're going to start feeling really comfortable in your trading. And guys, if you're like me, then you just want to always keep learning, always keep improving, and hopefully have a nice long career for this, right? Okay, thanks, Mike. I appreciate that. All right, guys. So I think that's a good place to wrap today's show. So we will go our normal Monday through Thursday this week. Obviously, the markets are closed on Friday for Good Friday. And as you guys know, Thursday, usually we have some giveaways. For those of you that got the giveaways last week, that you got giveaways from me tonight, I'm sending you your emails, so you'll get those. Other than that, guys, thank you for tuning in to another edition of Beyond the Bell. I wish you guys the best, and I will see you tomorrow. Good night.